Welcome to the bullpen. This is our monthly look at what's happening in markets. We're talking with Tommy Grisafi from Advanced Trading, ATI Pro Media. Tommy, as always, we appreciate this chance to step back and review where we've been and where we're going in the marketplace.
Oh, Don, always fun to be here, and you're looking handsome as ever. You and I, we got it going. Two guys like us with gray hair and no hair, we should be able to educate people. Speaking of educating people, did you see that Charlie Munger died? And I think if you added up my age and your age, that's how old he was. He was 99 years old and still working. One of the financial greats we lost yesterday.
That's crazy. Talking markets, Tommy, you've got a 9 o'clock every morning. You're hitting YouTube. Tell me about this venture you're involved in.
ATI Pro Media, myself, Advanced Trading. I am an employee owner of Advanced Trading. We put together what I think is the best of the Advanced Trading employees and owners who want to do media. As you know, media is not for everyone, and it's not easy, right? There's a discipline to doing it. Hats off to you and your wonderful career. And we're going live every single day at 9 on the Advanced Trading YouTube channel. And then we do premium content. Premium contents for Advanced Trading clients of mine, advanced trading clients of mine, and of course, people who sign up for premium content that'll be released as of January 1st. So we're out there educating people, trying to keep them ahead of these markets. Of course, we'll do a little bit of education free every day, but the long form videos are after hours, and we'll send those out to folks too.
Hats off to you on that work. Looking forward to seeing more of it. Tommy, let's talk about this past month. What was the big story you saw as you looked at this month of November?
Hands down, interest rates. As you know, I spent a lot of time in the bond pits at the Chicago Board Trade. I would trade bonds in the morning, walk over, then trade corn, finish trading corn, go back to the financial pits. The 10-year note went from what earlier in the month was a high of 505 all the way down to 4.27. What's that mean? If you're grandma, it means if you go get a 6-month or year CD, you're going to make a little less. If you're out there, our clients, your listeners, the American farmer, people involved in ag, you're either making money or borrowing money. The cost of borrowing money has went down, and that's a great thing for agriculture because, as you know, the markets went down also. So it doesn't cost as much, but note, operating has still doubled what it was a few years ago. It was at some point looking like it might triple. So operating notes will come in as people go to refinance here in February. Great news for the American farmer, Don.
That's good to see. As we look at this grain market, we do have a large carry in this trade. Why is that? What's happening here?
We have too much corn. It's that simple. It doesn't need to be a long, drawn out answer. If you want the long version, oh, the Mississippi River's low. Oh, the Panama Canal. Oh, demand's down. Just let's go with we have too much. And in past years, we didn't have enough, or there was a fear that the world was going to run out of grain. We've had different weather markets around the world, but absolutely Russia invading Ukraine. I said it on your show. I said it on national TV. I I talked about how, yes, corn and beans and wheat, more corn and wheat, especially wheat, were exploding. Um, but it's going to come back to haunt you. I remember being at CHS Ag Service Days, and we went on stage. Chip Flory was in town. He was subbing in for Tyne Morgan on U.S. Farm Report, and we filmed a U.S. Farm Report show. And I said, I know wheat's double limit up today. This is going to come back to haunt you. Corn made 33-month lows this month, and wheat is just absolute dumpster fire. Sorry, I don't know how to say it any nicer, and I don't want to swear. But on the bright side, soybeans have showed some really uh, bright spots. And the other yellow commodity, Mr. Wick, gold, is literally uh, a day or two away from making new all-time highs. If it chooses to do that, it's about call it $20-$30 from all-time highs. So not all commodities are going down. We have noticed some bright spots in commodities.
Still, educate me. I'm looking at Dees corn at what 450, that territory for this current crop year. We look for 2024 Dees corn. We're $5. What's that 50 cent difference? Why?
That is the market telling you you grew a good crop and demand's not there. If you store and hold that corn for one whole year, it's worth 50 cents. Now, get your pencil out. I have pencils here. Get your pencils out, do the math. There's a cost of storage, there's an interest rate, there's shrink, there's all types of stuff that grain elevators deal with. If you stored that corn for about a whole year, I have a really good idea that that whole 50 cents would be gone. So the market will pay you 50 cents. It says, hey, I don't want your corn right now. But if you could wait till August or September or next December, I'll want it more then. And you go, okay, but it's going to cost me that much to get it to you then. So it's like that dangling carrot that it's worth more later, but if you do the math, you realize it's really not. That leaves one play left. That'd be a cash market, quick ship basis move. As you know, you live in Grand Forks. It gets really cold. Trucks aren't starting and someone wants corn. They're going to have to come for it through the cash market. So look for corn to bottom here in these levels. And what you'll see is that the cash market improves, then the spreads improve, then the futures improve. That's typically how the markets work.
Oh, we've got the combine in the shed now, putting a wrap on 23. Too soon to be talking about 2024, Tommy?
No, not at all. I mean, we have to, because farmers are very upset as we come into first notice day today, tomorrow. I mean, there's an official day that's first notice day, but we've been calling clients all week, letting them know that we should not have December futures on anymore. And those clients are saying, "Man, I don't want to be in this position where I sell 450 corn." I said, "Well, the reason you're selling 450 futures is you thought 550 futures weren't good enough because in the year before you sold 7 or 8. So the question is, why didn't we spent a year and a half, 2 years above 550? Why was that such a bad price? But then you take 450 today." And the reason is, whenever you sell something for a high price, whether it be a house or a pickup or something, an investment, a stock, and then the price drops, it always feels cheap or like it's on sale versus that this is the new normal. And this is the new normal. December 23 corn is 50 cents under 24. So I could look in the camera and say, "Hey, would you like to sell your corn 50 cents higher?" Yeah, go sell December 24 corn. Now, there's other things we'd ask you to do after that, but I'm just saying, if you want to make sure you don't sell 450 corn next year, you have the right and opportunity to sell $5 corn this year, Don, for next year.
Good point. OPEC is meeting tomorrow, Thursday. What's that mean for us? Any expectation there?
OPEC's not going to call you or I, and I always tell people that at the point Tom Grisafi and Don Wick know what the heck's going on, it's probably already out there in the news. But they're going to talk, and if they want that price to oil to go up, they'll do things. If they like the price of oil, they'll continue to pump. There's also other factors, how Russia plays into that, and just overall cost of shipping. But OPEC's a very powerful, what would you call it, institution, and they can move the oil market. So keep an eye on oil. That very much affects what we do here in America with gas and ethanol and all the energies we use, sir.
I was at the North Dakota Agribusiness Expo yesterday in Fargo, and they had a speaker from Mosaic, Andy Young, that was talking about the fertilizer market. I found it very interesting. He had a map showing all of the fertilizer production that comes out of the Middle East. So far, with Israel and what's happening in the Gaza Strip, it really hasn't impacted that. But if that conflict expands, it really could be some major issues when it relates to things like energy and obviously fertilizer as well. I was really surprised when I saw all of the infrastructure that happens in that Middle East area.
Mm-hmm. Interesting to note, to add on to that. Great point. Thank you for bringing that up. Gold was about $300 cheaper. Call it $250 just to play it safe. Gold was $250 an ounce cheaper the day that Gaza went into Israel. And so gold has had a tremendous rally. Just to note that, yes, what's happening around the world geopolitically can very much affect commodity markets.
Tell me, this cattle market has been in a bloodbath. We went, 5, 6 sessions consecutively down, and triple digit losses. We went the other direction here yesterday. Give me your thoughts on this market. Obviously, we deserved to bounce after the way we went, but where do you see this cattle market going?
I just like the way you said that, Don Wick. This show should be called "Cattle Deserve a Bounce." You're making me giggle, and you are right. We had a heck of a bull market. Last time we had that was quite a few years ago. We almost went tick for tick for what that market did, and then we put in new all-time highs. The problem with the cattlemen is they were long and unhedged in some cases, and the funds were really long. As you know, you've talked to me enough, interviewed me enough, or had correspondence that when the speculator's long and the cattleman's unhedged, when they both get to go out, that's what last Friday looked like, abbreviated session. Tremendous selling on an abbreviated session and huge selling on Monday. I think you'll hear word here in the next few days or weeks that some people actually got themselves in trouble using certain derivative products or whatnot. We don't want to start the rumor mill, but we'll just give you a little taste that someone did something wrong and got in a little trouble, because even though fundamentally the cattle market were bullish, we knew that, right? If Don Wick is sitting there in Grand Forks and says, yep, there's tremendous fundamentals in the cattle market, and I speak to how many analysts do you have in your Rolodex that you could talk to who would actually tell you that cattle had bullish fundamentals?
Yeah.
25, 50?
Oh,
You have
yeah.
a Right. So call it
Yeah.
50. So if Don Wick calls 50 people and says, what's the fundamentals in cattle? They're bullish. If we know that, you might want to be a seller, you might want to be a protector, and you might want to get the heck out. It's best to get in the lifeboat while they still have them. And I'd said it on TV. Maybe you want to put a life vest on, not because we're sinking, just in case we do. We had that sinking moment and we actually accelerated into what looked like an oversold period. We massively accelerated and then we capitulate, and we have what happened yesterday where feeder cattle were actually limit up. I'm a little emotional about it, but I dislike when farmers and ranchers lose money, and I dislike when they don't have the opportunity to capture all that money that's out there. I love when farmers do well.
Yeah. You got that one right. Tommy, Farm Bill, over this past month, we saw the extension come into play. We now have a Farm Bill, a year extension through the end of September of 2024. Speaking with just about every farm group, they want to make sure that Congress comes to town in early January, or at least in that first, maybe second quarter, and get this thing wrapped up so we don't get involved in election year politics. That might be a big hill to climb, just because of all the other dynamics that are at play in DC. So while we got a 1 year extension, let's hope it's not a longer time period than that.
Are you telling me, Don, that we could have a new elected president before we have a farm bill? Is that possible?
That's very possible, especially when you're considering the razor thin margins that we have in both chambers of Congress, and really the inability to get a lot of things done with that situation. So that's always interesting as well. Tommy, end of the month, a few days here. Anything farmers should keep in mind? Any positioning or anything as we wrap up November and go into the new month?
Just respect risk. There's insurance products out there. Keep an eye on 2024. I can tell you that even though we're excited that interest rates have come down, they've come in a little bit, they're still elevated compared to the last 15 years, not compared to the last 50 years, but the last 15 years, we're going to deal in a higher interest rate environment. And yeah, it's exciting. Gold's almost at all-time highs. I don't know anyone watching this show that raises gold, Don. We raise corn, wheat, beans, edibles, sugar beets up in the Red River Valley, cattle, throw in a couple other things that I forgot to speak about. You don't make money raising those things. You make money selling those things. Let's get back to the basics, sharpen that pencil, and get ready for 2024.
Wonderful. Tommy, again, remind me, where can folks find your morning update at 9 o'clock on YouTube?
Yeah, you can go to Advanced Trading YouTube channel, hit like and subscribe. We'll get notification every day. If you hit like and subscribe, hit notifications, you will get put on that. Of course, if you need to email us, we now have an email, info@atipromedia.com.
Fantastic. Appreciate it, Tommy. Tommy Grisafi with us from Advanced Trading ATI Pro Media. That is our bullpen, the monthly look at what's happening in the marketplace. I'm Don Wick on the Red River Farm Network.